So the Fed told us in their dot plot that they are looking at 3 rate cuts next year. The market, the smart money, is now expecting 6 rate cuts. The Fed is telling us that they're probably going to have their first rate cut consideration in June. The market is telling us March. One of them's right, one of them's wrong. Lots of stuff going on. We're going to talk about this with the great Jonathan Twombly. How you doing, sir?
I'm doing great, Michael. How are you?
I'm doing pretty well. I actually think we may disagree on this one. So this actually might be pretty good. So why don't you go first, Jonathan? Why don't you talk about what's transpired over the last couple of weeks? The dot plot has sent the market into a tizzy. The Fed has said they're pausing, but maybe not. I mean, there's a lot of stuff going on. What are your thoughts on all of the hysteria and really the collapse in the 10-year, the collapse in mortgage rates? What say, Jonathan?
Yeah, I think the market is getting ahead of its skis, to be honest with you. I really,
Shocking.
I really
Yeah.
do. Yeah, shocking, right? That I would say so. Um, I mean, we have just seen this pattern over and over and over again over the last couple of years where people have been, wishing the
Yes.
Fed into a pivot. And of course, now that the dot plot is out and it's showing cuts, people have gone into a frenzy and like, hey, we've been right all along.
Mm.
I think that the market is being overly optimistic about this
Sure.
possibility.
Mhm.
Um, I mean, and one of the Fed governors has already come out and said that we're
Sure.
not planning to cut rates yet. We're pausing, we're
Mhm.
pausing. We're going to keep rates higher for longer. So I think that um, a lot of people are going to be surprised to the negative
Mhm.
when the Fed doesn't cut, and then we're gonna see a whole bunch of other sort of you know wringing of hands and gnashing of teeth and stuff when the cuts don't come.
Yeah.
So I'm not saying that the Fed will not definitely not cut rates next year. I
Mhm.
just don't really see the argument for cutting rates
Yeah.
without a recession.
Mhm.
And obviously the markets are screaming, but why should the Fed listen to the markets? Really,
No, I
what's going
agree.
on in the
Yeah.
economy that matters. And as long as the economy continues to be strong, one of the and here we go again, the latest figures for consumer confidence are up, right?
Yeah,
They're
big. 110, expected 104, last 101. I just talked about him this morning. Yeah,
yeah.
pretty
I
big.
I mean, they're not back to where they were before all this started happening, but they're up in a big way,
Yeah,
which I think signals that um, people have kind of accommodated themselves to the new normal, and now they see things improving, and they're
mhm,
they're not as worried about a recession as they were. Doesn't mean we won't have one. Doesn't mean there's going to be a soft landing. But I
yeah,
think that consumer confidence is a really important measure, and if consumer confidence is improving,
agreed.
then that is good for the economy, which is not good for rate cuts, right?
Yeah.
So that's my view. But what's your view? You think it's going to happen? You think we're going to
Well,
see rate cuts?
I get very nervous anytime I hear, and especially when I say this time is different.
Mhm.
I've studied economics and specifically the consumer for 30 years, real estate for 20 years, and I very rarely say that. History often repeats or rhymes, right? It's how I called the housing market. Not it's only a transaction crash, not price, because I studied the 80s when the last time has happened, right? So I very rarely say that. But I think what's going to happen is if we have a recession, it'll be shallow and short, negative zero point 0.1, negative zero point 0.2, uh, probably just below trend growth early part of next year. Unemployment's going to stay below 4.3, 4.4, certainly below 4.5 all year. And I still think the Fed cuts. Now, why is that? That normally doesn't happen, right? The last rate cut, all the rate cut cycles back to the 1960s were all because the economy hit a ditch. I think because of the $9 trillion and all this other stuff, the pandemic nonsense, the fact that inflation will prove to be more transitory than it was transitory, it just took a lot longer to work through, that the Fed's going to cut because inflation collapses. And again, I said this the other day, and core PCE came out this morning for Q3, 2%. What's the Fed target? 2%. It was expected to come in at 2.3. I expect the next couple of inflation readings, not necessarily the one coming up because the base effect is small, but the next one is quite large. I expect a CPI headline to be under 3% in the February report. I expect shelter, which last reported at 6.5% increase. We all know that's bullshit. That number is so wrong. It's flat to negative. That's going to come through eventually. So I think there's a very good chance that for the first time in near as I can tell, the Fed will cut rates because they're too restrictive, not because the economy's in a ditch. Now, if you ask about when, I think June is certainly a better option than March. If you ask about the number, I think 3 or 4, not 6. So I do think they're ahead of their skis. But really where I find myself challenging history, and it doesn't feel good to say this, but I believe it, is the Fed will cut because inflation is falling, not because the economy's in a ditch. Kind of odd.
See, here's where I take issue with
Sure.
this. So I don't think that, so if the economy continues to perform, then I think, well, that just tells you that the rates are not too restrictive, right? So
Well, it depends. So again, I think we have to, if we're going to split hairs, let's split hairs. I think below trend growth could be sub 1%. The Fed wants 2%, right? They don't want, so again, just because it's not negative doesn't mean it's good. But yeah, but you're right.
Well,
If we keep going at 4.9% like we just printed for Q3, yeah, there's no chance we have a cut. If we're growing at 5% a month or a quarter, there's no chance that the Fed cuts.
yeah, this is what, so I mean, maybe we're not disagreeing that much, but I don't see the Fed cutting unless there's actually a real actual recession.
Okay.
Because for a couple of things. Now, I think there's a lot. So there's this time is different, and then there's this time is different, right?
Sure.
So I think what a lot of people are counting on is you look at those charts, they say this is how long it takes for the Fed to cut after its last rate hike, and it's pretty predictable. The problem with that is that in the past, you've had tightening led to a recession and they had to cut, right? Generally speaking, right?
Generally, yeah.
If it doesn't lead to a recession, then there's no reason to cut. And also rates in the past, we did not see rates at historic lows for historically long times, right? So what you're seeing now, I think, is like a rebalancing back to normal, right? The rate cut thesis basically, I think, presupposes that unusually low interest rates are the new normal, and that the Fed needs to somehow get back to that or get back closer to those super low rates. I just still kind of question whether that is true, or if it's not true, how low those rates really are. Because I think also part of what this whole 6 rate cut desire is all about is that then it'll keep on going after that too, right? That we'll be back at effectively zero interest rates.
Yeah.
We'll have sub-inflation, we'll have real negative interest rates again, which is what I think a lot of people want, because they grew up with that, and they don't know anything else, and they think it's the Fed's job to juice asset prices. And a lot of assets were purchased on a juiced basis, and they need to get back there. So I think a lot of people who are looking at the negative consequences of having purchased property under those circumstances of 21 and 22, they need a lot of rate cuts to get back to even be above water, let alone getting their equity out. So I think there's a lot of wishful thinking behind this, and so that's just my view. I mean, I see there being a lot of ameliorating factors that make it difficult to say, well, the Fed is going to cut because that's what the Fed always does. And I know you're not necessarily saying that. I don't think you're saying that the Fed is going to cut because the Fed always cuts. But I think that I think the market view is that the Fed is going to cut because the Fed always cuts when it stops raising. But again, in the past, they've raised and raised and raised until they choke the economy off, and they created a recession, and then they had to cut and cut and cut and cut. And if that pattern doesn't repeat itself, then there's really, as far as I'm concerned, I can't see and I can't see a basis for cutting. And then the other thing too that you and I have discussed in the past, which I think is still holds, I think the Fed is also going to be extremely wary of like setting off the whole inflationary cycle again by cutting too soon. Right. So I think they're going to be very cautious about cutting, frankly, but before.
That's why a March cut is unrealistic. I mean, unless the economy really tanked. I believe the Fed is going to go a meeting or two longer than quote unquote the market expects, just to try to build that in. So yeah, I think a March cut is highly, highly, highly unlikely. But a June cut, given where I think inflation will be printing by then, I think a June cut, even if the economy is not in a recession, will be a requirement. Because the other thing that I've come to realize by researching this is the Fed wants to maintain kind of 2 to 2.5% real rates.
Mm.
That's their, this nice edge of between being too restrictive and too loose. And if inflation falls to sub 2%, being at 5.25 to 5.5 is too restrictive.
Well,
right? That's 400 basis points.
If that's the way you defined it, that makes more sense to me. If it's targeting a specific real interest
That's exactly what I think the Fed wants.
Yeah.
I think the Fed feels, again, given you have to read between the lines because they never say anything black and white. My gut is the Fed wants real rates to be positive, not negative.
Yeah.
I think they want between 2 and 2.5% is where they're comfortable, right? Because it's impossible to pick a number exactly. But to have it be 400 basis points, to have it be 350 basis points, I think they're going to say that's too much. And that's why I see 3 to 4 rate cuts, because they're going to want to maintain the 2 to 2.5, even if we are not in a recession. I could see these rate cuts.
Does that though then imply that if inflation starts to spike up again, they're just going to be trying to like sort of fine tune this all the time? Like,
they're not going back to zero.
No.
And they're going to try to maintain real rates between 2 and 2.5. Those are my anchors in my thesis.
Interesting. I mean, that has a ring of plausibility to me, that whereas the sort of the Fed cuts because it always cuts. That's not happening. Yeah. No.
I think the Fed is trying to get back to, they don't want to do zero rates again, ZERP or whatever you want to call it.
Yeah.
They don't want to do QE. They want the economy to function with real rates of about 2 to 2.5%. I think inflation comes down sub 2% by the summer, thus forcing the Fed to cut. And let's just round this out. I don't think the Fed cuts by any more than 1/4 point per meeting. I don't think we're going to get the whole elevator down, right? Escalator up, elevator down. I think they will tinker. Oh, we'll cut 1/4 because we're at 350 basis points. Oh, a little bit more. They're going to be slow to cut this time because they don't want to reset asset inflation, which could start this whole thing again. So that's my thesis. And again, saying this time is different really scares me, but that's how I see the dominoes unfolding.
Well, that's at least like a principled like theory for interest rates, as opposed to what I see out there. And I think also it has to temper people's expectations then also about where rates are going, because so let's just say that then if you're talking about 2% inflation and then a real federal funds rate of 4%, then you're talking about interest rate spreads of 150 to 200 basis points. You're still up in the sixes. And
Correct.
if you borrowed sub 4, right, you're done. You're still not happy, right? I mean, if you're not operating well enough to grow your NOI, and that's a challenge depending on where you are. If we're talking about commercial real estate, right? If you're in the Sun Belt, growing your NOI is going to be very difficult for the next 2 years.
Easy.
So
easy.
It's going to be tough for you.
No, I think the Fed wants to punish misallocations of capital, right? We are seeing more and more uh, billion-dollar, what they called unicorns, right? There was a company that just went BK yesterday, the day before, called Bird. Who is Bird?
Yeah.
They were basically renting scooters. Their valuation at one time was $2.5 billion. It never made money. Guess
Yeah.
what? They're bankrupt. I think the Fed wants to punish misallocation in the private equity space, in the the small business space, and in frankly the syndication space. I think there were bad deals done. You and I saw them. You and I talked about them. You and I did the math. We took $100 million building with very minor adjustments and turned it into 48 million bucks. We knew this was coming, and I think
Yeah.
those deals need to be punished.
Yeah. I mean, some of them, yeah. I mean, some of them, but the Fed, frankly, I mean, the idea of like the Fed punishing people for following its lead seems a little perverse to me, but I get it. I mean, if they're going to expect people to like be on their best behavior despite offering them free money, it's a little bit rich to say we're going to punish them. But I do think that the Fed hopefully has learned the error of its ways with
Yes.
this kind of extreme liquidity.
Mhm.
Um, for such a long time. And
Yeah, animal spirits
yeah,
are real. I think Greenspan once said animal spirits went crazy. So, yeah, at the end of the day, I feel like I'm on an island talking about the Fed cutting without a recession, um, just because I do think they're going to want to maintain the spread of about 2 to 2.5. So it'll be interesting to see what unfolds. But Jonathan, where can people find you?
so if you would like to get on my investor list, please Google Two Bridges Asset Management LLC and jump on the phone and join the list. We are actively looking for deals. We think we can get deals even in this environment, given what we're looking for. So if you have money that you don't want to have sitting around earning nothing, reach out to us and we'll do our best to help you out.
Thank you very much.